Hi guys, welcome to the Savvy Money Show with me, your host Sean. Today we're looking at stocks I'm looking at. Later on I'll be doing stocks I'm buying. These are just stocks I'm looking to buy this week. I thought you'd want to know. These require further looking at. I already own some of these. You recognise these from about a month ago when I picked them up. There's a lot of information about Crown Castle at the moment as a 5G REIT. If you remember, I did a full breakdown of all the 5G players, and when I pitted Crown Castle against all the others, American Tower came up on top. Now, so yes, Crown Castle is one of the biggest, but when you're looking for best value, you can see there how it's had a little spike up. Now you can go for Crown Castle. People look at it and think, oh, it's cheaper, but you need to look at the whole company. I'm looking at also if sports open up. These plays are in case sports open up. You have Comcast. Now Comcast is a good company to have anyway. Has a 2% dividend, a P ratio of 17, and it's just an all-round good company to have. Starting to dip a little bit. Now, if sports come back, Comcast will make money out of it. If with 5G, Comcast will make money out of it. So, Viacom. Now, this has a 3.7% dividend. I like to have companies that have a dividend above 3% because I like to think inflation of going 3%, because the majority of the time that's where it will go, and if it doesn't, then that's a bigger bonus for me. Now, that doesn't have a PE ratio, but that doesn't bother me if you can get a good discount. No, it's not a great discount, but it's good enough. To tell the truth, I'd want them to actually say sports is up and running, it's not going to close down anymore again for this to happen. But if we have that, then you'll already have lost the discount. Now, Disney, because as I'm sure you know, they have an interest in sports as well. There's still a low. To tell the truth, they never hit my price point for picking them up. I have a tiny, by tiny I mean 1 or 2 shares. I still think Disney Plus will be worth $200 on its own if they had to spin it off, and the rest is gravy. Now, people were saying to me about Netflix. Netflix is great. You can get Netflix, buy Netflix. I said about buying it during the dip and selling it after earnings. But the problem with Netflix is they were very innovative at first. They haven't done much since. And don't forget to hit that lovely like button, almost as lovely as me. Helps with the YouTube algorithm and getting the video out to more people. And don't forget to hit that subscribe button if you haven't already. Become part of the Savvy Money Show family. We give each other hints and tips and updates about stocks and shares we talk about on the show. As well as that, you can ask me to look into any share you want, and I don't charge a Discord fee or ask for a Patreon. All I do ask is for you to comment in the box below and hit the like button. even if you disagree with me, especially if you disagree with me, I like a debate. And if I do something wrong, I want you to call me on it so I can improve the channel. And why not check out the links in the description below? There's lots of others. I've used each one of them myself. I wouldn't give you links if I haven't checked them out myself. If you're looking for a free trading platform which should trade your stocks and shares, you know, you can get a free share worth up to £200 for signing up and depositing a small amount. A free trade only requires a £1 deposit. The others require £100 or dollars, depending on which one you go for. Stake has over 3,500 US stocks on their books, which is the biggest one outside of the US. Whereas Trading 212 is one of the best and easiest platforms to use. But as I said, I use all three. Anyway, on with the show. And now we go on to Zion Oil and Gas, which I've been asked to look into. It's an Israeli gas producer and exploration company. They're doing it so they can be independent of importing from other countries. Which I understand. If you look into it, you will see that they've just got permission to drill the next well in Israel. However, we want to know why it's dropped, because it has dropped 40% on the back of it has dropped 40% on the back of inconclusive tests from another well. Oh, sorry about that. And if we look into its financials, here's a penny stock, is 45 cents a share, but the thing is, it's got money. For instance, total liabilities are $5.3 million, total current assets are $6.8 million, so I won't worry about it going bankrupt. It's in a better position than most oil providers. The cash it has is $8.5 million, and the cash on hand, and it burns through $6.5 million of that. Yeah. Now we will go to statistics, because I like to know the price to book, and book value per share is 13, and it shows that you're not overpaying too much. You know, it's not under the book value, but then you look at the cash per share, it's 4 cents, so you know, that kind of bumps it up, because you've got 6.45 million on, and so you can make that as 17 cents per share, and the rest is pure speculation. It has dropped 40%, so you may want to consider it as a bit of speculative play if you want to go into oil markets. But bear in mind that the winter time, the fall and winter time, is the worst time for oil and gas. So if I was to go into oil markets, I would pick up a tanker stock at the same time, purely because you see there it's dropped, and then now it's had a bit of a run up, but I would go into a tanker stock, just so that if we go into Contango again, it would offset it. Also, it is a small company, which means it can either jump up or go back down again. It is better placed than a lot of the small oil companies. However, I'm already in ExxonMobil. If I was to go into a new company, it would probably be Shell, purely on the basis that Shell are making a profit. They have cut their dividend to make that profit, where Exxon and Chevron have and BP have kept their dividend at the same rate just for the sake of keeping their dividend, and have made huge losses. Now, I'd rather the company I'm with cut a dividend and keep themselves on a stable footing. This company obviously doesn't have a dividend. They don't have a PE ratio at the moment. That may well change in the next year. I'm not saying you shouldn't pick it up. I'm just saying you need to do a bit more research into it. It's not one I know of, but it's one that I've been asked to look into. I hope this was enough for you. If not, please let me know, and I can try and dig up a bit more in the future. I'll see you later in the next video. Bye.